The big event for markets this week is going to be that US CPI number. And early on in the show, we put up a chart about how supercore has been faring. That's services adjusted for energy and food prices. And what's interesting there is that number has actually been trending upwards. My feeling is perhaps the market is getting a bit complacent about the trajectory of these numbers, and we may be in for a hawkish surprise this Wednesday. How are you feeling about things?
Well, clearly, inflation is going to be more sticky than perhaps some market participants were expecting. And it's not a huge surprise to me to see that super core number, in terms of the fact that one of the upward pressures on inflation has obviously been wages. And that obviously does get itself expressed perhaps to a greater extent in the services space than in other areas. So we can't have everything. We are fortunate that, in fact, growth numbers in the United States are looking better than perhaps some people were fearing at the beginning of this year, and certainly at the end of last year. But that does mean that we continue to have some of the stresses on the economy, which were also present at that stage, notably in the labour market, which continues to be very resilient, which is good news, again, for workers in the United States. And it does mean that one does have to be somewhat cautious then in terms of what one is hoping for, if that is the hope, in terms of rates coming down. I would argue that we're probably in a slightly better environment, at least for equity markets, because we have got that growth, but that does come at something of a price as well.
I just want to ask you about another bit of data we got on Friday, that University of Michigan sentiment indicator dropping to a 6-month low. That a reflection of how US consumers are feeling about the economy. So you put the two together, you have stickiness in inflation and you have sentiment indicators turning south. That is a recipe for stagflation, isn't it?
Well, clearly the Fed does not see stagflation, and I rather join them on that. We do have a tendency of exaggerating perhaps the negatives around us. And it is true that there has perhaps been a slower drop down to the consumer in terms of some of the improved conditions that have been seen over recent months, and services is an important part of people's lives, and people are aware of those numbers remaining resolutely quite high. But let's not forget that as wages continue to perform strongly, as the employment market also continues to perform strongly, that means that there is less fear of losing work. There is less of a cyclical up and down swings ahead of us. And bit by bit, that probably will filter into the consumer's pocket. But it's not a perfect scenario. No, you're absolutely correct.
Let me take it to markets, because the consensus estimate for growth for US stocks is still sitting at around 9% this year. Do you feel that that number is too high in light of everything that we just spoke about now?
Absolutely not. I mean, again, the problem with having growth is that that may lead to some upward pressures on inflation. We were in a very unusual situation up until and during the pandemic, that we had very low inflation, but I wouldn't say that that was normal. We need to go back to before the great financial crisis for a normalized situation when it comes to the effect of growth on inflation. So that 9% does seem to be underlined on what is a much more important number as far as I'm concerned, which is the actual fundamental earnings growth of companies. And we've actually had a good first quarter report. And what has been also quite encouraging is that we are seeing a broadening of that earnings growth as opposed to what we saw in 2023. Remember that in 2023, the earnings growth in the US came from a very narrow set of stocks. This time around, we're seeing much more involvement of other areas of the economy. And that also, I would argue, will feed through to the consumer as well, as they see that the activities in which they are involved are also performing better than they were in 2023.